Welcome to Drill Down Earnings. We've got a quick look at the latest earnings from Synopsys, that all-important company that does design software, formerly just for semiconductors, now for entire systems after a big merger. It's one of the 50 most important companies in technology, says me, Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. So Q4 earnings for this company, a little bit better than the estimates, at $2.26 billion in revenues and $2.90 in adjusted earnings. But we don't care about beats or misses. We want to know what actually happened with this company. And it's such an interesting company. So they did this huge acquisition. They fought for maybe 18 months to get this deal done, if memory serves me, getting it approved by US regulators, and having great difficulty getting it approved by Chinese regulators, but getting the deal done. And the result of acquiring this company, Ansys, they're able to expand, as I mentioned. They used to really be focused on purely semiconductor design, complicated enough. But as design spreads into systems, and systems are so much more closely integrated with semiconductors themselves, that the packaging of semiconductors is so much more complicated as well, building right into the systems. The newish CEO, Sassine Ghazi, who's been at the company for a very long time, but took over as CEO about 2 years ago. Sassine sort of recognized, and the team there, Sheila Glazer, the terrific CFO, somebody I like a lot, also recognized that this opportunity to acquire Ansys, another company that's in the system design side of things, would really help them have a much better and fuller and more complete offering to their customers, who are, of course, designing more than just the semiconductors now, designing a whole lot more. So the acquisition of Ansys completed in the third quarter, fiscal third quarter, fully in effect in the fourth quarter. So you could see the revenue growth was just fantastic all of a sudden. 38% year-over-year revenue growth, much of that from the acquisition of Ansys. It's their second growth engine. As I mentioned, in the quarter, gave them $668 million in Q4 revenue, $757 million for the year. That is to say, almost all of it in the fourth quarter, some of it in the third quarter. But that positions Synopsys as a silicon to systems engineering firm, not just a silicon firm. And they expect double-digit Ansys growth in fiscal year 2026, which of course we've already begun for Synopsys. And margins have kind of hung in, their operating margins have hung in, their profit margins, I should say, when their continuing operations now at 20%, much better than it was a year ago in the midst of this acquisition. So their margin expansion's accelerating. They say next year, non-GAAP operating margins are going to get to 41%, which would be a significant increase. Again, supported by the Ansys mix shift, as well as they're cutting 10% of their workforce reduction, cutting costs across the board of this company, a tough thing to do. But you can see the results here already taking place. Now, when we look at their overall business, they've got two businesses: the design automation software, which now includes Ansys, which is design automation software, and design IP. So they've created, I like to think of these as Lego blocks, completed pieces of design that people who purchase or license these pieces of design can just kind of get head starts in what they are designing. And that business has struggled. But their design automation had a great record year, strong demand. They said hardware-assisted verification, 12 competitive HAV wins just in the fourth quarter. And so their advanced mode, multi-die, AI-driven design workloads for chips really driving a lot of their growth there as well. But their design AP business struggled. It was muted in fiscal year 2026 as well. They say it's going to be after an 8% revenue decline in the entire fiscal year of this last year. China's a big piece of it. China restrictions hurt them. Slow foundry customer ramp they talked about, as well as timing gaps in several high-performance IP titles. Now, they've said, don't look at this quarter to quarter, but look at it over time. Nonetheless, they say that next year, not going to be great. But their design automation business, again, up 65% on a year-over-year basis. And this business has really evolved. They got rid of their software integrity business, sold that it wasn't growing much, it wasn't a big part of their business. The IP business is shrinking as a percentage of revenue, but again, the design automation growing so much fantastically because Ansys has added a new leg to this business. Another interesting thing, when you look at where their sales are, China has struggled. I made a chart here that shows all of their sales as if, forget quarter-over-quarter growth, just in terms of percentage of sales. North America remains their biggest part of their business. Korea is also really big. Other is a thing. That's everything else, obviously. But China is shrinking, or at least not growing much. But interestingly, in this quarter, Europe grew a lot, from $179 million in the previous quarter, $361 million in this quarter. We can imagine a lot of that is probably Ansys, but good growth in Europe, maybe making up for some weakness in China. I didn't hear any other analysts on the conference call really pull that that number out, but I think that's an encouraging thing. But China remains a major drag and will be. In fiscal 2025 was down 18%, down 22% if you take out ANSYS. And they say it will remain challenging next year as export controls are accelerating some share shifts for them. There's also some Chinese competitors that are trying to gain a foothold. China probably not in a hurry to see ANSYS or an ANSYS enhanced Synopsys come into that market. The market liked these results. The stock traded up a lot initially, up 2% during the course of the conference call, but in the last year, stock's down 6% in a positive year, but a very positive year for the S&P 500. But it seems that things are coming together for these guys. I'm a little biased. I like them. I've done work with them in the past. I hope to in the future. But, I think that, and so, you could take that with a grain of salt, but I think that it's important that their backlog hit $11.4 billion, which shows that their customers like what they're getting and want to get a lot more going forward. Sassine Ghazi, the CEO, talked about how their portfolio is so much richer than it was before, and he's got a lot of faith in what that's going to do for this business going forward.
Overall strength of the portfolio we have is such a privilege to have the portfolio as we engage our customers in various markets, not only AI, HPC, because as you know, the market of semiconductor is much broader. Today, we are the leader in providing the IP for automotive, for mobile, for many other segments. In the AI, HPC, we have a very strong position, and our customers constantly reminding us how mission critical we are to their roadmap and development. We outlined 90 days ago 3 headwinds, China and the whole foundry uptake. We're assuming in our guide that not much change going into FY26. In other words, we are being balanced and pragmatic the way we're taking into account in our guide for IP these 2 factors. In terms of resources and prioritization, we made a number of changes. We made changes in our development leadership. We made some changes in the sales leadership as it relates to IP. And we are well on our way to close some of the gaps. You're going to see, from a customer engagement point of view, on a couple of the titles that we are being pressed on timing of delivery, is that we will close these gaps by mid-year 26, FY26. So all in all, we're looking at 26 as a transitional year, muted growth, with the long-term objective of mid-teens, and that we feel very strongly about.
So yeah, when the deal was done 90 days ago, they gave us a good update on what's going to be happening for Synopsys, and they're delivering on those results. We'll see what happens in the coming year, but those backlog numbers suggest a lot. I've given you a lot of numbers. What's the big number? What's the one number that you drill down earnings takeaway and the drill down earnings bite, the one number that tells you a whole lot? Well, first, Epistrophy Capital Research needs your help by subscribing to this channel. So click on the subscribe or follow us button, follow us on the socials. It really does make a big deal. It's helping our numbers, and our numbers help us get access to the people we need to get access to give you these reports. But let me give you a summary. So Q4, fiscal Q4 earnings from Synopsys, your essential summary, your drill down earnings takeaway is that it was a strong quarter for this company. They completed their deal with in the last quarter with acquiring ANSYS, and this quarter was fully baked in. The entire quarter resulted in 38% revenue gains, a record quarter of about $2.25 billion in quarterly revenues and profitable revenues at that. Profit margins were strong, but I think the most important number, the drill down earnings bite, the one number that tells you a whole lot, is $668 million. That's how much revenue they got from ANSYS in this quarter alone. It shows this new leg of growth for this company that is going to have fuller designed tools, not just focused on semiconductors, but well beyond that into system design, which their customers have told them they desperately want, and they now get from Synopsys. All right, thanks for checking out Drill Down Earnings. Follow me at X at Cory TV, Instagram, TikTok, YouTube, at Drill Down Pod, as well as on Spotify or iTunes. If you're listening to the podcast, follow me on all those. It makes a big help. And of course, give us your comments. We'll take a look.